Good afternoon, everyone, and welcome to this afternoon's webinar, What to Know About Small Business Loans in 2021. My name is Malini Krishna, and I'm a Senior Consultant and Assistant Vice President in the Business Advisory Services Group here at Pursuit. For those of you who are new to our programming, Pursuit is a community-focused alternative lender, and our goal is to ensure that our clients not only have access to capital through loan programs they need, but also access to strategic guidance and advice, as well as business expertise to help them thrive and grow. I'm especially excited about today's conversation. We can move on to the next slide. Because I get to be joined today by Tom McHale, who is the brand new president of Pursuit, a role he just started in 2021. And although this is a new role for you, Tom, you have been with us for over 23 years, and Tom is currently responsible for the operations of the organization and leverages his expertise and leadership to drive relationships, technology solutions, and strategies to increase capital for all businesses in our tri-state footprint, which is New York, New Jersey, and Pennsylvania. But more excitingly, he has had a long tenure here at Pursuit and has overseen multiple geographies, lending products, and has helped us navigate numerous economic shifts and changes. So I think you are the ideal person to share your experience and insight today. So welcome, Tom.
Thanks, Melanie.
So my goal here today is to get you to give us some transparency and some tangible advice for the small business community about capital access and how we as an organization, as a CDFI, support small businesses. So let's just begin and dive in. So what as an organization have we really learned in the last year, and how have you drawn upon past experiences to help us navigate all the various challenges we faced since COVID-19? I know that's a big loaded question, but let's get started there.
Well, I'll start with past experiences. I've been here for 23 years, so I worked through the 9/11 crisis, Hurricane Sandy, 2008, all of which are completely different from what we're dealing with now. I think back to some of those times when I was a lot younger and working with some more old school bankers, I'll say. And they would always say something like, well, this is a lot like the S&L crisis back in the late 80s or the early 90s or something like that. And I could always find some parallel to compare it to, but this is something that I think everybody has we're all in the same company. So there's a little bit of comfort there and that we can all experience something together, although we all prefer to experience something a lot different. So really, I think we're just sort of trying to figure out the playbook at the same time everybody else is. And part of what we're doing to adapt is really just to listen to what the market is looking for in terms of the types of loans that they need or what they need funding for, and then trying to adapt and adjust staffing and resources to fit those needs and making sure we're addressing those products as much as we can.
Yeah, and we've had to really transition as an organization to not only focus on our core lending portfolio, but a lot of these disaster recovery loans. I know our entire company and team for the last almost year has been really focused on things like PPP. How has that changed some of the perspective on lending for you?
Well, I think the biggest difference has been the requirement for speed to get applications through, especially with so many small businesses suffering and needing that cash to help their businesses stay afloat. So we put a lot of resources into technology, like so many others have, and that's been a huge blessing for us in order to be able to process loans much more quickly, fund loans much more quickly. So that's probably been the biggest change that I've seen. I think we all sort of saw it coming with the changes in technology and the fintechs and the online applications and stuff like that, but this sort of fast forwarded all that for everybody.
Yeah, we did something like 7,000 PPP applications last year, and that's only growing with the second draw.
Yeah, the stat I like a lot is we did like 10 years of loans in like 3 months, which is not uncommon. And a lot of lenders are sort of reporting the same thing, but really the level of effort needed to do that was not insignificant. And we're, obviously blessed to have a terrific staff that can really step up when they need to.
And you authored an op-ed for us that we posted on our website in December to really talk about that small business is looking at funding, which we obviously have, but you have a broader perspective about what does a small business really need. You really highlighted the need for us to promote small businesses. And I was just wondering if you could sort of tell us what inspired that and how we think as consumers are broadly people who are interested in small business, what we should do to adapt for small businesses themselves.
Yeah, I mean, this is our life. I mean, our livelihood is small businesses, and not only lending to them, but supporting them with loans, grant funds, technical assistance, all those things. So the op-ed that we put together was to promote Small Business Saturday, thinking and shopping small, obviously. And I mean, that's kind of what we do. It's in our blood here. So yeah, that was the motivation for it and the impetus for it.
And we had some lovely lists around that Small Business Saturday. I know we did an upstate list, a capital region list, and a New York City list. So we're really here to support our borrowers. And I found it very useful. I got a lot of holiday gifts off of that as well. So
cool.
Let's move into 2021, in 2021, I should say.
Yeah.
You said that this is a year unlike any other. Does that mean that you think that everything about lending and just sort of access to capital is completely different this year?
It'll be different for sure. I think the message that I've heard or has resonated the most with me is how, now I know people are suffering and that businesses are hurting, but that the economy has not been hurt as bad as people originally predicted. The chat that I hear from different economists and just in reading the paper is that they expect to see a rebound that's going to last, they think, through the decade. I mean, that's crystal ball type stuff, which none of us really have. But we're just going to continue to adapt to what's needed out there. And in terms of what to expect, I expect that bank lending will probably start to pick up again for the second quarter, so June, July, or April, May, June of 2020. Banks really tightened up. They didn't know what to expect. They weren't sure where this was going. And then over the last 6 months of the year, we started to see that ease up a little bit, banks starting to get back into the lending market. And I expect that'll continue. I don't know that we'll see what we saw in 2008, where banks really tightened up for a really long period of time and just weren't making small business loans like they were before. Our activity has been really strong and for a lot of different programs, whether it's for startup businesses or businesses looking to purchase a property or equipment for their business. So we're seeing good activity. And again, all signs are that should continue. So.
Let's move on and talk about some very specific situations that a lot of borrowers have asked me to ask you. One, we see a really low interest rate environment right now. And, we have guidance from, the Federal Reserve and other chief economists saying that that's probably going to continue for a long time. Do you think, given that rates are low, we will have that the small businesses we support will have access to low interest capital? Or do you think that banks will kind of tighten it up a little bit right now?
It'll be a little bit of both. I mean, the low interest rate environment right now is tremendous, especially if you are looking to invest in like long-term assets, like a building or equipment. You can borrow long-term 20 or 25 years through the SBA 504 program, which is one of the programs we administer, at 2.5% fixed. So the rate environment right now is really, really good. How banks deal with that or how that affects overall lending, it doesn't really, because banks are focused on what they call their spread, which is just the difference between what they lend at and what it costs them to make a loan. So that doesn't move quite as much as, say, an interest rate might move up and down. Spread tends to stay relatively constant. So I don't know that that's going to lighten or make it easier for banks to make loans. It's good for the customer if you can, especially if you're looking to invest in something, you can get a really good rate these days.
And it does seem like the businesses that are best poised are the ones that have some access to capital that they can invest longer term to take advantage of that low interest rate. Like you've talked to us about, folks that can secure the property of where their business is for a longer term or that kind of thing.
Yeah, I mentioned that 504 program before. It's a 90% financing program. So, and really the spirit of the program is to allow a small business to keep their cash for operations and put as little money down on a fixed asset so they can then leverage that asset, invest in the asset, and grow the business with the help of that asset.
So that really talks about folks that are in a position with cash and sufficient working capital to kind of move forward. We have noticed that there are some small businesses who have been asking for advice on if they had some issues in 2020. So if they were behind on payments, and anything else that you can kind of imagine that has sort of put some hindrances on some of our smallest borrowers in particular. What do you think the impact of those credit issues will be from 2020?
I mean, the way that we look at any applicant that has past credit issues is what is the story behind it? Everybody has been through something in their life that probably caused some credit mishap at one point or another. So we look at the entire story and look at the entire package to determine whether or not it's a loan that we can approve or not approve. So from our standpoint, I think from the SBA standpoint, they're going to be a little bit more lenient if you were a small business that suffered or couldn't make payments for a period of time in 2020. But if you've made every effort to bring those payments current, or maybe you had some help with, if you had an SBA loan where they were making the payments for you, if you made every effort to correct that and sort of make it right, then that goes a long way for a lender. From a bank standpoint, they're probably not going to change their outlook too much. If your credit is suffering, then there's only so much they can do. You're going to want to look to the CDFIs, the micro lenders, to help with some of those types of situations.
That actually helps us sort of talk about, can you talk a little bit about the difference between a community bank, a CDFI, and a relationship with traditional commercial banks?
Sure. So I guess the community bank and commercial bank, they're sort of one and the same, but they're just covering different markets. They have different loan parameters, lending sizes, that kind of thing. A CDFI, Community Development Financial Institution, they're engaged to make loans to underserved markets, whether it's minority, women-owned, LMI groups or LMI areas, that kind of thing. The banks are also incented to do that type of lending. They're just not very good at it, and they'll admit it. And then the reason we know that is because a lot of them look to us to facilitate those programs for them. So banks will often look to, I'll call it an intermediary like a CDFI, to help get money out the door to those different communities.
And that's a good point, right? So if you have some credit issues, we've seen some folks, or here's one that we often see, we see an increase in lending because so much are on the balance sheet of borrowing, let's say for a borrower, because they got so many different loans and things like that. So a CDFI could be that good primary intermediary if you've gotten a lot of relief loans and help you approach sort of traditional financing.
Yeah, we use the term capital continuum a lot, which really just relates to how different businesses can move through the process or move through the different types of lending products. So we take a lot of pride in the fact that we can make a loan to a startup business and also make a loan to a well-established growing company. And that's how we reference that capital continuum. And whether it's a bank or a CDFI or a large national lender, they're all sort of part of that continuum. So we look to try to fit that point where it's either from a startup to an established business, and then once the business gets to a point where they've grown in size, where they no longer meet SBA criteria, or they've just graduated to a different level, then the regional banks and the larger banks will take over at that point.
And do you see with the savings rate on the lights that those regional banks and some of those larger traditional institutions will expand their reach into small businesses, or do you think they'll still sort of be prudent on that lending in terms of opening up relationships on that side?
That's, it's going to be interesting to see how many banks are still around, let's say the end of this year or maybe 2 years from now. I don't mean from the standpoint that they're not going to be in business. I mean from an acquisition standpoint, and we're already starting to see some banks merge, and for the purposes of obviously growing their market area, growing their territory. So that's sort of going on. I don't know how community banks, what their sort of growth strategies are, if they're looking to increase. A lot of it depends on the bank. There are some banks on the community side that are looking to grow their market, and there are some that are looking to essentially focus on their market and make sure they've got that fence surrounded and supported properly.
Thanks. That's a good clarification for us. We often like to say to our customers on the business advisory side, we're here to help you develop stronger banking relationships as you continue to grow. So we have that role. And on the other side of things, what are your advice for folks that say that they do need some sort of bridge financing and maybe go to an online lender or other folks that have higher interest rates?
Be careful. There's obviously a market there. In some cases, there is an actual need for that type of financing. And if you're looking for that to be a long-term fix, then you're looking in the wrong spot. That's not how you want to use those types of funds. But if you're looking at something that's going to be a short-term fix, where let's say you need to pay an invoice before a receivable is going to come in or get paid, that might be an opportunity to use that type of financing. If you've got receivables coming in, you've got to make payroll. Again, another opportunity to use that type of financing. But I would just say be careful. The rates are extremely high. So just be careful. Look at all the fine print and the paperwork.
And as I like to say on the business advisory side, this is a great time to really look at your cash flow projections to make sure that you have sufficient working capital, because that's the thing that can help you plan for some of these things.
Yeah, that's a great point.
On the advisory side, we've done a lot of articles that folks can download and templates that they can download from pursuitlending.com on income statement, P&L, cash flow, balance sheet. So you can use this time right now to make sure that that is not the position that you're in. Moving forward, we've had a lot of policy interventions, obviously, since the COVID-19 crisis. There was the CARES Act. We've had a lot of legislation that came out in December. Can you walk us through what the actual things that happened as a result of those and how they support small business, so we can make sure that the folks on this call are taking advantage of what's out there?
Sure. Yeah, I mean, there's way too much for me to go into every one of them in detail, but I can sort of give an overview. And the good thing is our website, pursuitlending.com, has information on all these programs. Like go back to the question you had before about how we've adapted or how we've changed. I think one of the things that one of the things we've done a lot of is beef up our website to include information on every program that's available, whether it's a federal program or a state program, or even a local New York City program, because we administer a lot of those programs, not a lot, but a number of those programs, whether it's for New York State or New York City. So we get involved in a lot of that stuff, and we put all the detail on our website. And it's helpful not only for people trying to figure out what is out there, but it's helpful even for us as employees to figure out, okay, what is this program? A lot of them have the same acronyms, and they have the same sort of letters and numbers, and trying to figure out what does what can be kind of tough. But in the end, the purpose of the CARES Act was to get stimulus benefits out to small businesses. Whether it was PPP, the Paycheck Protection Program, which we've done about we did 7,000 loans in the first round. We've done about 3,500 loans in this round, which for a company of our size, like I mentioned, you mentioned before, how many loans we did, and I think I said that was like 10 years of lending, done in like 2 months. So that was probably the biggest part of the CARES Act and the stimulus. There's also the payment relief. So if you have an SBA loan, you're going to get, well, you've already gotten 6 months of payments made for you. There's also, starting with the February 1st SBA payments, you would have gotten an additional 2 months of relief, unless you are a restaurant. So you get an additional 5 months of relief beyond the 6 months you've already gotten. So these are all things that help put money back in the small business pockets so they can weather this pandemic.
So that's sort of on that macro level. Let's move to, we've done a lot of work on the local level too. And if you talk, we've done New York Forward, we've done PPP, we've done other grants that you talked about. Do you see that sort of continuing, or do you see that because we're kind of hopefully and towards the ends of COVID-19, and what advice would you have for a business owner who's been very dependent on some of those relief programs for their working capital needs as they transition?
Yeah, I mean, I think if you're not taking advantage of them, then you need to rethink that, because if you qualify or are eligible for a PPP loan, then you should pursue it. The application process is not that difficult. You can go to our website and apply. We have real people that can help you in terms of answering the phones and answering emails and questions and stuff like that. In terms of the stimulus benefits continuing, it's probably, I would say, by June time, the federal benefits will start to taper off. The state benefit programs and even the New York City programs, or the more local programs, didn't seem to kick in until a little bit later. So I would expect them to probably stick around a little bit longer, at least until funding is available. Obviously, that's a big factor. Did I answer your question?
Sure. Well, I think it's also an interesting time, right? We talk to a lot of borrowers who this might be the year in the last 12 months that they've really accelerated their borrowing. Some of it's been very good, right? If you got PPP and you got a smaller loan, it probably will be forgiven, and as things are moving forward. But there are other programs available for your working capital needs, right. And I always advise, you've said this on a couple of our internal calls, make sure that people are prepared for some of the other things they can transition to for their working capital needs. We talk about SBA microloans and other things like that. So, I think it was, you even said, like, we've really participated in these programs because we have a pulse and we have a real interest in these communities, but we also have a sustained capital flow.
Yeah, we're very fortunate that we've been around for 60 plus years. We've built a strong balance sheet that allows us to do these types of programs, and allows us to, whether it's offering them directly, we have direct loan programs, or administering them for New York State and New York City. Again, having that ability is again part of our blood. But as you mentioned, there are, whether it's New York Forward, LMI Storefront, Queens Small Business Grant Program, and these are all names that might be foreign to people in the audience. But again, go to the website, check them out, see what the benefits are. Some of these programs, even if you've gotten PPP, you can get New York Forward. There are some limitations in terms of how much of a PPP loan you could have gotten, but these are low interest rate programs. There's some grant programs that we administer. So I would always encourage people to check them out. And if the website doesn't provide enough information, again, we have people that you can talk to, and they will walk you through the program and explain to you what the benefits are, what you need to do, if it's the right fit, or if it's not the right fit right now, maybe it's something that we can fit you into 3 months from now, or whatever it is. We don't. People say, oh, if you decline, obviously you have to decline applications every once in a while. If you decline me, does that mean I can't come back and talk to you? No, absolutely not. If there was an issue with your application where we can't get past right now, our door is always open. We're always willing to talk to you again and see if there's a way that we can help you.
Before we move on, you mentioned a key buzzword I'm hearing a lot, which is a strong balance sheet. We are in a strong balance sheet position. Can you explain what that is, not only just in terms of a bank, but also how that applies to a small business? Because that seems to be the buzzword of what you should prepare for in 2021.
Right. I mean, the key factor in balance sheet is the word balance. So you want to find a good balance of working capital, which is just your current assets minus your current liabilities, meaning that you have sufficient cash and accounts receivable and inventory to continue operating, and you're not saddled with a lot of short-term debt like credit card debt and things like that. And then further, you are retaining profits, retaining income if you're an existing business to the point where your net worth is growing, is not negative. So those are, when we think about a balance sheet that's stable, that's kind of what we picture is, again, strong current assets, a strong working capital, minimal short-term debt, and a growing net worth.
That's helpful. So I don't want to end on all doom and gloom. So let's move on and talk about some opportunities, because there are some, right? You've mentioned that you've seen a lot of opportunity in previous times of crisis,
Sure.
post-crisis. Obviously, the recession seems to be a great time for startups, and we've had a lot of success in this area as well. So I just want to make sure that some of our folks who have all said, oh my God, everything is shuttering, this might be the time to open something.
Yeah, I mean, I think back to 2008, and that was one of the bigger surprises from that recession was the number of new businesses that started. I remember thinking to myself, like, why would you start a business in the middle of a recession? But when you think about it, you don't have any customers that haven't paid you, like some existing businesses. And you have an opportunity to sort of see the landscape and what some of the problems have been, and maybe adjusting your business plan to handle those types of problems. Like we're seeing some startup restaurant applications right now, and the first thought is, why would you consider starting a restaurant right now? But then as you read through business plans, you see, okay, they've thought about this, the COVID pandemic, how it's affected other restaurants and how they're going to adapt to make this work. And I think that's the word adapt is something that we throw around a lot here, because we're always so surprised at how small businesses get through this stuff. And one of the ways they do it is that they start another small business. They see an opportunity and they make it work.
I just want to also, I came from startup world in my previous lives, and I think there's a lot of confusion around. Most people, when they say like, I need money for my startup, they just assume it's going to be equity, or they have friends and family that are helping them, or they're just draining their accounts. Can you just talk about like the other types of financing for startups, and specifically from the SBA? Because I don't think this is as widely known as we would like.
Yeah, no, I mean, every SBA program is available for a startup business. Depending on the program, you might see more or less startup companies within that program, like the SBA microloan program, which is a program that we administer or that we participate in, sees a lot of startup businesses. It's smaller loan sizes, whereas, say, the SBA 504 program, which I mentioned before, is for real estate purchases, equipment purchases. We don't see as many startups. They're eligible, but we don't see a lot of them. And then also, you mentioned before the different programs that we have through the CDFI, through community finance. These are all programs that are generally eligible for, or startups are eligible to participate. And I think that's where you're going to see a lot. If you're a startup, that's where the activity is going to be. You're going to have a tough time getting a loan from a bank at this point if you're a new business. I don't think I'm not saying anything here that's earth-shattering or mind-blowing. I think that's pretty obvious. So look to other avenues. They're out there. I mentioned the information is on our website, so check it out and do your research, because there are programs out there that can help.
And I think also one of the other benefits I found from working from this side and with someone like Pursuit or CDFI is that we have a broad network of partnerships that can help startups, right? Like we work with a lot of the SBDCs locally. We're very tapped into the local networks. We've even referred folks to some local funding because we just happen to talk to those folks all day long. So, there's definitely a good advantage of sort of, even if you're a startup, to establish some sort of relationship. And I always say debt isn't necessarily the worst place to start for a startup if you really have a strong business plan and a plan moving forward.
Yeah, I mean, it goes back to that balance comment before. You want to try to balance your debt and your equity as much as you can. Not everybody has that opportunity, but you mentioned the technical assistance part. I mean, that's one of the really cool things about what we do here is that if you're a new business and you're looking to get financing, we're not just going to give you a loan application and tell you to fill it out and come back to us when you're ready. We have people available to help you complete the application. We have people available to help you with business plans, marketing, all that kind of stuff. So it's more than just, okay, here's a loan, pay us back. It's here's a loan, let's see how we can help you figure out how to pay us back more easily. Let's see what sort of things you can do to make you more successful, which obviously helps you pay our loan back, which is good for us, which is how we want the relationship to work.
Right, and just on that note, moving on from just startups, we are also really focused on underserved communities, and this has been in the news a lot lately about how these communities have been really neglected, specifically MWBEs and veterans. And I just wanted you to highlight, we are a resource for this, and in ways that we've
Yeah, and we've done it in a few ways. We obviously have done it internally, where we are reaching out to past applicants, past or current borrowers to determine, okay, these areas that could use some additional assistance. We have great relationships with different organizations across the state, including the SBDCs, as you mentioned, the Brooklyn Chamber, Evergreen, groups throughout New York City that really help us to work with the more local community-focused groups, because we're we're stretched. We've got a lot of different loan programs that we're working on. We are not as good as knowing what goes on in your community as these community groups do, as much as they know. So we rely on them to tell us, okay, this is where the need is. Can you help us fulfill this need? And a lot of times we can figure out, okay, yeah, we can establish a loan program for this community, or we can work with New York City to help administer another program in this community. So it's just about sort of working together, outreach, figuring out who does what well, and not trying to try to compete with each other about, okay, who's going to get to this group first? Okay, this is what we do well. Can you help us take what you do well and we do well? And I think we can all do it really well together.
And that's a really good point, because I think that a lot of folks feel like, oh, if they only do this, they don't do that. And the idea is really, our idea is to increase capital for small businesses across our portfolio. And I think this really shows up. I know I've specifically over the last 3 weeks have been doing a lot of open office hours. There's some folks on the call that I see that have attended them. And this was specifically to help these kinds of borrowers to make sure they get the actual hands-on assistance. And, we want to make sure that from that technology point of view, that all of the information and things are married with the information we have on a macro level, which is what you're providing with some of the really micro kinds of things to do. So I think that's all the time we have. I've kept you on for about a half an hour. I want to just sort of recap and say, first of all, thank you, Tom. We've gotten a lot of insight, and it's helpful to see one of the real values of being at our institution is that we work with so many borrowers, and from a small 1 to 2 person shop to 100 people and larger capital projects, and we have that perspective of the macro. And I just thought I'd end here and ask, you said that 2020 was a year like no other. What are your advice for the small business owner as they move into 2021 from a year of not like any other?
I would just say continue to adapt, continue to do what you've been doing, which is trying to make make things work and figure out how to make it work. We're kind of in the same boat, I think, on our end here. I mean, we've starting back in March, April, obviously the pandemic started to really take force, and looking at our balance sheet and figuring out, okay, how is this going to affect loan repayments and things like that. So we're sort of going through a lot of that ourselves, just trying to figure out, okay, what's the best path forward. And we haven't always made the right choices, but we've tried to adapt and change and figure out, okay, if this choice doesn't work, let's see if we can make this other choice and go down this path, which is what small businesses are doing every single day. Where, it's takeout pizza place closing their tables up and figuring out how to get more delivery drivers out of the road. It's just stuff that's just like that simple.
And that's helpful, right? We talk about our passion for small business, but we also often learn from the practices and to try to make ourselves more nimble. So I want to say thank you. We hope to continue that conversation. It sounds like though we've done a lot of really different things in the last year, there's been a lot of things that have been go back to what has always worked, which is be adept, be transparent, and we try to do the same. And I hope you'll join us for another conversation later this year to give us some really positive news about all the wonderful things that have happened in 2021.
I would love to.
Thank you. Have a good afternoon, everyone.